Hi, I'm Steve Sadler, the CEO of Allegiancy, and I'm here today to talk with you about our Regulation A+ IPO offering. Allegiancy is offering $30 million of common equity to the public for the very first time. But you should know that we're a 10-year-old company, not a startup. We have a track record. We have established revenues with low volatility of earnings, counter-cyclical in fact, where the marketplace goes down, our income goes up. We have a very high growth rate, and we are launching an incredible opportunity. And so I'm here today to talk to you a little bit about what we think of as an enormous disruption. Commercial real estate is ripe for disruption, and we have a plan to blow up a $15 trillion industry. Commercial real estate is second only to publicly traded equity, all publicly traded equity, in terms of the size of that industry. In my background as CEO, I'm a chartered financial analyst with decades of institutional experience, have done hundreds of millions in successful direct real estate investments, but I've also served as the CEO of a financial technology startup back in the 90s, raised venture capital, and now leading Allegiancy, a commercial real estate technology startup. And what we're talking about in the real estate asset management business, we manage properties for investors. We don't own the buildings, we manage them. And we're a market-leading specialized real estate asset manager, providing ownership with strategic analysis of things like tenant mix and capital improvements and 1,000 other items. Tactical execution, vendor analysis, lease marketing, a deep involvement in all the details to assure the owners are getting the absolute best performance. We drive operational efficiency with technology that measures power and helps to optimize utility bills. Electronic payments. Investment performance is our top priority, and all of the things we do dovetail to drive results higher for our clients. Execution is really what it's all about. At the end of the day, our clients were looking for investment performance. And so at Allegiancy, we say, we don't own the buildings. Allegiancy makes those investments perform better with a comprehensive, forward-leaning, technology-driven approach. Allegiancy has already been delivering superior results to investors for nearly a decade. We provide technology, we provide the leadership to make the technology work, we deliver on the execution that maximizes the financial performance of our clients' commercial real estate assets. And in the rest of the presentation, the acronym CRE is used to reference client assets that we manage. And so think about that like this. A commercial real estate building is a big investment, not unlike a $65 million Gulfstream jet. And that commercial real estate, as long as things are going well, it can kind of run on autopilot, much like your Gulfstream jet. But when things get turbulent or something big happens, you need a pilot in that chair on the Gulfstream, and you need a driver, you need a leader in position for your building to perform at its optimal level. So whether it's a Gulfstream jet or a Ferrari F1, an experienced pilot, an excellent driver, those things are important to make the technology or to make that asset perform. And that's really what Allegiancy does. We are the leaders that drive performance for your properties. Now, each property is a standalone business. You're not competing against 1,000 properties, you're competing against the building right next door and in your local marketplace. And so in any business, for excellent performance to happen, we need to have leadership. And for commercial real estate, it's really no different. But most assets are running on autopilot. There is no leadership in place. And what Allegiancy provides is that game-changing leadership, not unlike what Jack Welch did for GE or Steve Jobs with Apple or Elon Musk at Tesla. We do leadership. That's Allegiancy's role.
How do you get the best performance? Well, at first, it's simple and easy to manage. However, you will soon realize that the situation can quickly become quite chaotic. But leadership changes things. It's true for music, and it's true for business. For owners of commercial real estate, Allegiancy is here to conduct business on your behalf. To bring clarity from chaos. Trust Allegiancy to bring superior outcomes and to bring the best possible performance.
We have deep integration in our technology platform. There are many disparate systems, from accounting to power and electronic and building control systems, tenant ticketing systems for reporting problems, and all of these pieces of data are floating around in the ether, and virtually no other commercial real estate manager is addressing those pieces. We have built an integrated platform to allow us access to all of that data real time, helping us drive decision making. And that commitment to and expertise is really the critical piece, because what Allegiancy's done is we've approached this business differently. We are looking at it from a completely different perspective than most real estate professionals. And it's that perspective that has driven us to use predictive analytics, decision engines, and algorithmic analysis to drive results and improve performance. And when I talk about results, I'm not talking theoretical results. I'm talking about actual achieved results. Over the last decade, we've been involved in doing this, live fire drills for the last 10 years, the last 5 of which have all been about building the technology platform. And this careful management has yielded tenant renewal rates 75% plus in an industry where 56% is the norm. It's realized 230 basis points of improved return on equity, a big number, meaning $7 million paid to investors that otherwise wouldn't have gone there. And the paying attention to these details, to the results, to the relationships with tenants and vendors and property owners is really what's driving that. And the technology gives us the efficiency in our daily operations to be able to spend time on these higher order tasks. And high tenant renewals means big money for a property owner. And the impact is really taking us, if you look at the chart in front of you on the right side of the screen, from the lower left to the upper right in performance. That's where the 235 basis points comes from. It's from aggressive and effective leasing and efficient and proactive asset management. And it gives us happy clients. And we have here a few of thousands of quotes from satisfied customers who are doing business with Allegiancy and have experienced the kind of results we're talking about, where year after year, time after time, Allegiancy is delivering an improvement in performance. And back to my example, well, here we'll go to this example, the technology driving efficiency. This is a chart that shows you a depiction of utility usage at an actual property in Greensboro, North Carolina. The chart on top with all the jagged lines, those represent electricity usage spiking up and down, and that's what the building looked like. That's what its usage looked like when we put the technology in place. Shortly afterwards, after we have optimized building performance, you see the chart on the bottom. Things are much smoother, much cleaner, not as all choppy back and forth. That meant for this building about $100,000 per year in income or savings from utility bills. $100,000 that dropped to the bottom line drove about a $1.2 million increase in asset value. And that doesn't even count the fact that we're not turning equipment on and off and burning through our capital equipment, the HVAC compressors, etc., by cycling them over and over and over again needlessly. This kind of efficiency drives current results, but it also improves long-term results. And it's been an integral part of why we've been able to grow successfully. Allegiancy has $200 million of commercial real estate assets that we've added to the portfolio through organic growth in 2014. We added $450 million of commercial real estate assets under management through an acquisition that was accomplished in 2015. We bought another asset manager, integrated that portfolio into our operations. We added $40 million of commercial real estate assets in 2016, in the first quarter of 2016. And today we have pending acquisitions and contracts for both the acquisition of asset managers and contracts with private equity real estate funds to manage their assets. All of that stuff is going on driving growth. And every $100 million of assets that we add results in about $450,000 of earnings or EBITDA that drops to the bottom line. And back to our market size, remember 15 trillion is the number that we use. It comes from a Forbes estimate of the market size. And Forbes and many others recognize that commercial real estate is ripe for disruption. A $15 trillion industry that delivers $886 billion in annual revenue. And only 30% of that asset base is institutionally and professionally managed. 30%, meaning that we have an immediately addressable market of over $7 trillion in commercial real estate. driving $52 billion in fee revenue. Allegiancy doesn't need to own that market. We only need 0.1% of that market over the next 5 years to achieve outstanding growth and meet our targets. It's an amazing opportunity in an enormous market that is incredibly inefficient. And that's what makes it such a compelling story for us to talk with you today about. The technology being deployed today in commercial real estate is largely from the 1970s. Deloitte recognized that in their 2015 report. PricewaterhouseCoopers, same thing, an emerging trends report. Real estate is lagging behind, dramatically lagging behind in adopting advanced technology. And part of what's happening there is that the players who are looking at technology and adopting new ways of doing things, you're seeing an enormous difference in the performance of those assets. The observed bifurcation that Carlisle's talking about is based on that. So let's go into a little bit of a video. We'll show you a 3-minute video that will walk you through how our technology platform works. Radical? Absolutely. Proven technologies, reimagined, integrated, and applied to real estate for the first time. At Allegiancy, we're using technology to reinvent a 200-year-old, $15 trillion business. And increasing profitability, even a little bit, is a big deal.
Our role in the revolution began with radical specialization in an industry stuck in the vertical integration of the 1950s. Focus and technology drive innovation. For a business as entrenched as the commercial real estate industry, that's pretty radical.
The norm in this business is for managers to wait for things to happen. People are reactive rather than proactive, using the business process and tools from the last century.
The status quo means millions of dollars wasted, along with missed opportunities for growth and income.
Allegiancy has a very different approach.
At Allegiancy, we deliver active asset management that's aggressively forward-leaning. Our innovative technology integrates operations using data and code to capture over a century of experience in both real estate and finance and turn that into action.
Value assurance, it's how our team creates extra return on equity for property owners. Higher returns bring us more clients, and our growth of over 400% in the last 18 months tells you that it's working.
Today we have a portfolio that stretches across the United States with hundreds of vendors, thousands of tenants, all integrated through our technology. Value assurance keeps us on top of our continued growth, actually increasing profitability and efficiency as we expand our portfolio of managed properties.
So here we're looking at real-time data. Basically every data point at every property we manage. We can track contractor calls to tenant upfit expenses and lease expirations, basically anything that will increase revenue or decrease expenses.
We're using technology to automate processes and map timelines. The resulting predictive analytics ensure the right person is notified at the right time.
Our proprietary dashboards and data displays give our managers up-to-the-minute information at a glance.
The algorithms and predictive analytics catch hotspots in real time before they become costly. The actions they drive create real value for our clients.
We have internet-enabled meters installed at each of our properties that beam us data on power consumption in real time. We can detect equipment malfunctions, call in local repairs if needed, or even rewrite controlling computer code so that systems are fully optimized.
Allegiancy's real-time data capture and analysis can help cut utility expenses by 20 to 30% on an average property. That could translate into savings of more than $100,000 a year, and those profits drop straight to the bottom line, adding real value to the asset. In today's market, it might be as much as $1,250,000.
Our technology platform captures and codifies decades of experience of senior professionals, allowing fast, effective, and consistent decision-making. We've reduced information lag from 30 to 45 days under the status quo to 24 hours. Rapid decision cycles accelerate learning and magnify our operating advantage.
Allegiancy's predictive analytics allow our asset managers to head off losses before they happen and capitalize on opportunities for profit that our competitors never even see.
We're disrupting this industry in a big way. In commercial real estate, we're the radicals.
this video, you've heard us refer to the fact that our competitors never even see these opportunities. And partly that's because they're complacent. They're not looking at the data, so they don't see the opportunities the data reveals. If you think about the biggest players in the market, CBRE with nearly 10 billion in market cap, Jones Lang LaSalle at 5 billion in market cap, all of these guys are market generalists. They're trying to do all things or be all things for all people. And their specialization is lacking, and their technology reflects the fact that they're not specialized. And it creates a great big gap for Allegiancy to walk right through. The most effective competitors in the market are the big guys like Blackstone Asset Management with a $100 billion portfolio, or Brookfield, another one with $140 billion. These guys have made some investments in technology and are doing a bang-up job, but that expertise is only available to the investors in their fund. They're not managing for third parties. So if you want top flight management for your asset and you don't happen to be a Blackstone or a Brookfield investor, Allegiancy is really your only option. We are the best third party fee-based asset manager in the business. And we're the only ones using cutting edge technology to make things happen more effectively, more efficiently, more consistently. And it's that kind of consistency, that kind of growth that's driving our financial performance. Forecast into 2017, fiscal year 2017, which will end June 30 of 2017. We're looking at about an $8 million EBITDA number at the bottom line. If you forecast out to 2021, we're talking about having about 10.8 billion of assets under management. That's commercial real estate properties that we're administering for their owners. Remember, we don't own the buildings, we make them perform. And that 10 billion of assets under management should produce about $42 million, $42.5 million of EBITDA. And so remember, 10.8 billion, it's a big number, no doubt, but it's 1/10 of 1% of the addressable market. So we don't have to take over the world, we're just talking about one slice of that, and then we're enormously successful and very profitable for our investors. And so let's talk a little bit about the team that's making this happen. I'm a chartered financial analyst, $1 billion in institutional transactions over the years, more than 800 million in closed real estate deals, 300 million or so direct to personal investments. In my financial technology startup days back in the late 90s, raised $10 million of venture capital. And for Allegiancy, we closed $5 million initial raise, or A round, back in 2014. So we've done an awful lot of these things before, and the technology platform we're delivering for our properties, or for Allegiancy, is really proven technology just being reimagined and integrated for real estate. My partner, Chris Sadler, has an MBA from Vanderbilt. He joined Prudential Real Estate in the mid-'80s, worked his way up to be the head of equity underwriting for Pru, who was at that time the largest commercial real estate owner in the world. About $10 or $12 billion of transactions under his belt there. Spearheaded the London office for Baring Brothers, a notable pension advisor at the time, and then came back to the States to work with me, starting this opportunity in 2005, 2006. Adding to the team, we have some other experienced, serious people. David Starowitz, MBA, JD, he's our Chief Operating Officer, has experience in publicly traded real estate funds, private equity real estate funds, managed $3.6 billion of institutional properties. Very well-rounded guy. Ron Mentis, MBA from Darden, he's a SVP of Quantitative Analytics. Ron came out of the team that took Capital One from a sleepy little sub-division of Signet Bank in Richmond and turned them into the credit card powerhouse that they are today, all with decision engines, sophisticated analytics, and modeling of that various kinds of data. And J.M. Ramey is our general counsel, experienced attorney with $2 billion of transactions in real estate, securities, and experience in tax as well. So a serious, solid team of accomplished professionals that are addressing real estate from a very different perspective, and a technology platform of proven technology that's being integrated and delivered to real estate for the first time. So Allegiancy's technology captures this communication. We work diligently to make certain that all of the players are accountable for their actions, their results, and it's measured, and there are fail-safes, if you will. If somebody misses their part in the puzzle, then we know that. and we're in a position to address that and get them back on track. And the increased efficiency and effectiveness of having daily access, minute by minute, real-time access to all of the data means that we're making decisions very quickly. In traditional reactive commercial real estate management, what happens is people are waiting 30, 45 days to get a report that then might identify a problem. In our case, we're looking at these things daily, which means we're making decisions 10 times faster, maybe more than that. And by the time our competitor gets his information, his report to make a decision, we've already gone through 3 or 4 iterations of attempting to address those issues and then evaluating the success of that solution and tweaking our approach. This kind of active management drives profitability and growth. Rapid decision cycles means that we're getting further and further ahead of our competitors as time goes by. And the technology that improves accountability and automates these routine processes has an important, critically important secondary effect. Not only are we making better decisions more consistently, but we're freeing up our best talent to invest in the client relationships that make a difference, both the tenants and the vendors and ultimately our investors as well. And having time to build those relationships is absolutely essential to being truly successful over the long term. And we are currently today managing a nationwide portfolio. We have had assets as far flung as Washington State, operating all of this from our Richmond office, using the technology to leverage our personnel. We are prepared to grow the company. We expect to have a dramatic 2017, and we look forward to having you participate with us. Thank you so much for your time.